Yes, good morning students. Today I am going to discuss treatment of tax in cash flow statements. Previously we have discussed format of operating activity, investing and financing. But now we will discuss the adjustment of tax. Tax can be given in question by three types. First, when only balances are given. Second, when only adjustment is given. And the third, when balances and adjustment both are given. So keep it in mind when only balances of tax are given. So balances means current year tax and previous year tax is given. So current year balance of tax should be added in operating activity at starting. And previous year balance of tax should be less from operating activity at last. Because as we know, in operating activity we have to less tax. If adjustment is given, as we all know that every adjustment has double treatment, it means the tax given in adjustment is same for current year as well as for previous year. So same will be added in operating activity in the starting and same will be less from operating activity at the last. But the important point is when both are given, balances and adjustment both are given in question, then we have to make account of tax. Then there is a need to make account of provision for tax. How we will make it? It's provision for tax account. Provision for tax account. Make a T-shape account. It's debit side and credit side. As we all know, provision given in liability side, so its opening balance should be started from credit side. By balance brought down, it is of previous year. And here we will write to balance carried down, it is of current year. So if adjustment related to provision for tax made is given, like this, you have to write by statement of profit and loss account. If made is given in question, then add these two amounts and less closing balance and we will get the balancing figure paid. We will get the balancing figure to bank account like tax paid. And if paid is given in adjustment, then we will write in the debit side to bank account and the balance we will get by statement of profit and loss account made. So balances can be paid or made. If made is given, then the balance should be paid. If paid is given, then the balance should be made. And as we all know, when we make an account, there is no treatment of balances in cash flow. So no treatment of opening and closing balance. And the provision for tax made, as I told you, all left hand items are less and all right hand items are add. So provision for tax made should be added in operating activity and provision for tax paid should be less from operating activity at last. Again I am repeating, if adjustment related to made is given, then the balance should be tax paid. If adjustment related to paid is given, then the balance should be provision for tax made. Made added in operating activity and paid less from operating activity. I hope treatment of tax is quite clear to everyone. Thank you.